Thank you so much for joining me on the show, Nifemi, and I'd like to know what you're expecting from that auction today.
All right, thank you for having me, Kenneth. We expect there to be a very high demand at the auction as usual. It's always oversubscribed due to the limited investment outlets for large corporates and individuals. So we expect the auction to be oversubscribed. We expect a marginal decline in the rates. I mean, it's demand supply driven. So based on what people put in, we'll see what the DMO eventually comes out with. But I expect a slight decline in the rates.
All right, but what's your call on yields in the near term, though?
Yields have been coming down, but in the near term, depending on how things play out. So I'll just talk about different markets here to give you some perspective. For the Treasury-Bills market, the 1 year is trading at about 12.7 levels now. At the last auction, it came out at 13.1. There was a slight decline from the previous auction. So we don't know where the rates are going to come tomorrow. So what you see is that people are actively buying in the market, to take the position now, given the uncertainty where the rates are going to come out tomorrow. Meanwhile, on the bond side, it's a bit quiet. The rate on 2049 too is about 12.7 levels, given the uncertainty as to the CRR implication in the market. So for now, rates are stable, but I think that the yields are still coming down slightly.
All right, then. So you mentioned the CRR debits. What are you guys expecting on that when it takes effect? So?
For the CRR debit, I think the effect would mostly be felt in the money market. It's expected that it would tighten liquidity. I mean, there's a 500 pips increase from where we used to be, so it would tighten liquidity. It would tighten liquidity in the money market, and once the liquidity is tightened, what you see now is that people sell off their short-tenor securities, to buffer their liquidity position. So I see a tightening in the near term once the CBN begins to implement the debits, and that would make rates go up in the money market and also up in the fixed income securities, the secondary market, because people will start trading off their positions to raise liquidity once the debit is effected.
All right. So, but what's your take on the bond market, though?
It's been quiet, really. It's been quiet. I mean, the bond market now feeds off what happens on the Treasury bills market because, I mean, the PFAs and the institutional investors now face the bond markets for their investment opportunities because that's where you have the good yields. So it feeds off on what's happening on the Treasury bills market. At the moment, it's quiet, but the rates there, the yields there have been coming down slightly because people are buying. But for today, tomorrow, I think it will stay stable. Given what happens at the OMO auction, at the NTB, then whatever happens there will stay reaction in the bonds auction again. Like I said, it feeds off the Treasury bills. So we'll see what happens in the Treasury bills tomorrow, and then that would stimulate some reaction in the bond market.
All right, let's looking at FX though. What's your call on what's been happening at the INE window?
The INE window the rate has been depreciating, interestingly. I mean, it used to be at 361 at the beginning of the year. Yesterday, I think it closed about 363.33. Again, there's the NDF maturity today, about $1.5 billion futures, non-deliverable futures is maturing today. So you've been seeing a lot of buying in the INE window. There's demand and it's outweighing supply. So there's been a bit of depreciation in that market. Again, based on where the rates close tomorrow, we'll see if the PFIs come in and if there's some sort of supply from them that will stimulate the market again. But there's been depreciation consistently, and we're at 363 levels. And if the supply does not improve, definitely we'll keep seeing a depreciation in that market.
All right, but what's your take on the FX reserves and the activity we've been seeing down in a couple of months?
Can you take that again?
The FX reserves and activity we've been seeing there in the past month, and what's your call for what to expect for FX reserves?
I mean, I think the CBN's priority is to ensure that the reserves are at a stable level. We're back to 40 billion levels. That's what the priority is, and I think that they've been taking steps in that direction. Right now, the reserves is about 38 levels, and I genuinely think it will just stay stable, and the CBN will continue to launch initiatives to ensure that it comes up in the near future. But for now, the INE market is very tight because we have a lot of demand in there that is unmet with adequate supply.
Yeah, I'm wondering what you guys are expecting about the new debt management strategy that is about to be released by the DMO. What are you guys expecting?
What they had released initially was that there's going to be the borrowing, they're going to do some internationally and some locally, and there's going to be savings bond, promissory notes, and a couple of new instruments. So, I mean, what I expect is that there will be more borrowing. I mean, they would be more innovative, and in the instruments they're releasing to borrow. I also know that they're looking to borrow about $2 trillion from the PFAs. So, I mean, I'm sure that there will be new instruments that will make yield more attractive for people to invest their money. So we're waiting to see what they'll do and how it impacts our fixed income markets.
All right, thank you so much for your time, Nifemi. We'll keep our eyes and see how the market plays out. I've been speaking to Nifemi Adeniyi. She's the team lead for liquidity management at Access Bank.